Hello, friends. I welcome you all to our today's session. And in today's session, we are going to discuss a particular topic that is about Section 194R of Income Tax Act 1961. Friends, many of you might be aware of this section. This section was brought in France Act 2022, and this particular section is effective or applicable from 1st of July 2022. And this particular section deals with benefits and perquisites provided in connection with business or profession. So many times people like us who do some kind of business or who are engaged in profession, they give some kind of benefit and perquisites to their business associates or maybe to their dealers, to their distributors. So in that situation, this particular provision which is introduced, it says that in those situations, the provider who is providing these benefits and perquisites is required to deduct tax at source at the rate of 10%. So if such benefit is provided, for example, let us say there is a businessman or there is a company who is giving a gift to a dealer, or who is arranging, who is sponsoring some pleasure trip for its dealers, or any kind of thing, then maybe provided in cash or kind. These things will be termed as the perquisites and benefit which is provided in connection with the business. And on that value of that perquisite or benefit, 10% tax is required to be deducted as per requirement of Section 194R. So as I told you right now, this section is applicable from 1st of July 2022. That means any such benefit which is provided prior to that, so up till 30th June 2022, on those benefits and perquisites, you did not deduct tax at source. But if it is provided after that, 1st April 2022, that tax has to be deducted. Right? For example, let us say in the month of July 2022, a benefit worth 1 lakh has been provided. Then one need to deduct tax at the rate of 10%. That means 10% of 1 lakh, 10,000 has to be deducted and has to be deposited as per TDS rule. By the 7th of August, it has to be deposited. This is the requirement. Now, let me show you the section. Let me share the screen. Let us read the provisions in detail. Section is important since it is new. Going to share the screen with you. My screen is being shared with you right now. Just have a look. Yeah, the section is relatively a small section. The entire provision we can understand with the help of this chart. First, I'll be explaining you this chart. Then, friends, let us read section subsection wise. We are talking about section 194R. As you can see, this talks about TDS on benefit or perquisites in respect of business or profession. So we will be talking about any kind of business and perquisites, and it may be convertible into money or not. That means these benefits and perquisites may be provided in cash or may be provided in kind. How it can be provided in cash? Suppose your dealer or someone associated with you in connection with the business, he is incurring some out-of-pocket expenditure and you are reimbursing. So this is a benefit, that is his expenditure, you are reimbursing. So this is a benefit perquisite which is provided in cash. Now you might be thinking how it can be provided otherwise than in cash. Let us say some gift is given, a mobile phone is given to someone, a laptop is given, some kind of incentive may be given in cash as well as in kind. All these are benefit and perquisites, and it may not be convertible into money, or it may be convertible, may not be convertible, it doesn't matter. All of them are benefit and perquisites. And if they're arising from business and profession, it should not be a personal benefit. It has to have some connection with business and profession. And this benefit, if it is provided to a resident, if this particular section is not talking about such benefits and perquisites which are provided to non-resident. Here we are talking about those benefits and perquisites which are provided to a resident. Okay, for non-resident, withholding tax and other provisions are there. You may go through that. So if these benefits are for perquisites are provided to resident, then tax is required to be deducted at the rate of 10%. So if you look at this portion of the chart, you can understand that this is the requirement what it says. And the provision has also made it clear that in case the benefit and perquisite is in kind, sometimes this benefit and perquisite are provided in kind also, as you have understood now. Or maybe sometimes it is provided partly in cash, partly in kind. When it is provided in cash, it is easy to deduct tax at source. So you are paying money, you can deduct tax and deposit it with the government. But when it is provided in kind, how to deduct tax? The department has tried to explain that thing with the help of a circular. We'll be going through that circular also. Here, what the law says that in that case, the provider of those benefit and perquisite, or the person who is responsible for providing this benefit and perquisites, is required to ensure that tax is paid. That means the recipient of that benefit should have paid tax, or the provider may pay on behalf of the recipient. Both ways it is possible. Okay, how one will ensure, that has also been explained. If the recipient is paying, he may pay it through advance tax payment challan, and he may provide that challan copy or challan number with a declaration. This is how I am the provider of the person who is providing this benefit for projects is entitled to rely on that advance tax challan and rely on the declaration given by the recipient. On that basis, he will be ensuring that tax is actually paid, and he can, after that, he can release the benefit and perquisite, which is not convertible into money. Okay. Now, this particular part we have understood. Now, this particular section has also given concession in some certain situation. So this provision is not applicable, first of all, when the aggregate value of this benefit and perquisite does not exceed 20,000. And here, friends, you have to remember, this aggregate value means during the financial year. And here we have to take the entire financial year. Entire financial year means from 1st April 2022 to 31st March 2023. Even if the law is effective from 1st July 2022, but for calculating aggregate value, it has been clarified by department that you have to take the entire financial year, because the provision clearly says that aggregate value in the financial year. So this is one exception, okay, or one concession, one type of concession given to people. Then one more concession is given to only to individuals and HUFs. If their previous year business turnover does not exceed 1 crore, if these individuals and HUFs are engaged in some business and profession, and their turnover in the previous year, preceding year, does not exceed rupees 1 crore, then they are not coming under the purview of this particular section. And if that individual or HUF is not having business, but he is engaged in some kind of professional income, then the turnover limit is not 1 crore, it is 50 lakh. So you can look at here the individual HUF's previous financial year's turnover. If it is more than 1 crore, this is an exception. Section is not applicable. Or an individual HUF whose previous year professional turnover is not more than 50 lakh rupees, then also this provision is not applicable. More than 1 crore for business turnover, it is applicable. More than 50 lakh for professional turnover, it is applicable. And the aggregate value exceeding rupees 20,000, it is applicable. Okay, not exceeding these three things, it is not applicable. I think this part is clear. This is in fact the summary of the section. The entire section we have covered here. Now let me read the section for you one by one. Let us see. First, you see 194R. If you see 194R subsection 1, if you have a look at the entire provision, it says that this, in summary, it says 10% TDS on all benefits and perquisites arising from business profession. This is what in essence it says. Let us read it. It says, any person responsible for providing to a resident any benefit or perquisites, whether convertible into money or not, arising from business or the exercise of a profession by such resident, uh, shall, before providing such benefit or perquisites as the case may be, to such resident, ensure that tax has been deducted in respect of such benefit and perquisites at the rate of 10% of the value or aggregate value of such benefit or perquisites. In essence, what it says, what I told you right now, this benefit and perquisites should be provided in connection with business or profession. It should be provided to a resident. Here you see the word resident has been used. And this benefit and perquisite may not be convertible in money always. It may be convertible into money or may not be convertible in money also. And then the person who is responsible for providing this benefit has to ensure that tax has been deducted. So he has to ensure that tax has been deducted. At what price? At what rate? 10%. This has also been provided. On which amount? On the value or aggregate value. Okay, you might be thinking now, who is this person responsible? Person responsible means who is providing this benefit. And in case it is provided by a company, then the principal officer of the company and as well as the company, both of them are responsible to ensure that tax has been deducted. This is the first subsection, which is, I think, it is clear to you. Then the proviso, that subsection explains that, you see, it is not necessary that benefit should be always in kind or in cash, as you are aware of. So if it is in kind, what will happen? This proviso says that if it is in kind, the person who is responsible, he has to ensure that tax is paid. If it is in cash, then you have to deduct tax and deposit. If it is in kind, you have to ensure that tax is paid. If you read the entire provision, you see this, the entire provision is reproduced here. I am reading from here, where the benefited perquisite, as the case may be, is only in kind or partly in cash and partly in kind. But such part in cash is not sufficient to meet the liability of deduction of tax. In that situation, it is paid in cash partly or partly in cash in kind, but the cash is not sufficient to meet the TDS amount. In that case, what will happen? Okay, it says the person responsible for providing such benefit and perquisites shall, before releasing that benefit and perquisites, ensure the tax required to be deducted has been paid. So he has to ensure that tax is paid. How he has to ensure? I have spoken you some time back. Again, we'll be talking when we're discussing the detail in what is provided in the circular. How will he ensure? In sum, he has to ensure that tax is deposited through advance tax challan and a declaration is received from the person that he has deposited. Now, the next proviso explains about non-applicability. As I was briefing you just now, this provision shall not apply in case of a resident where the value or the aggregate value in a financial year. Here you see it is talking about in a financial year. That means entire financial year value you have to take. Not that the section is effective from 1st July. We will be taking the values or the benefits which are provided after 1st July. No. But the financial year says aggregate value in the financial year does not exceed 20,000 rupees. If it doesn't exceed 20,000 rupees, then this section doesn't happen. Maybe the value of benefits provided post-July is 18,000, but pre-July, 40,000. Total taken, let us say 58,000, but still no need to deduct tax at source. Because, sorry, in that situation, you have to see the entire financial year. So in that situation, you need to deduct tax at source. Okay, because 50,000 provided prior to July during the financial year, post-July 18,000, so total comes to more than 20,000. In that case, you need to deduct taxes. Okay, so entire financial year has to be taken into consideration for arriving at this, to knowing whether it is applicable or not. But on which amount you have to deduct? Only those benefits which are provided after 1st July. That means only that 18,000 amount, on that amount you need to deduct it is, not on the value provided prior to that. I think I have made the concept clear. Okay, this 20,000 for the entire financial year, just to know the applicability. But the section is applicable from 1st July. So TDS you'll be making from any benefit which is provided after 1st July. This concept which I explained to you right now is clarified in department circular. We'll be talking about that later. Now again, few more exceptions. This is provided to individuals and HUF. You can read if you want the entire provision, you can read it here, but I have summarized here on the right hand side. You can see individual and HUF, if that turnover is lesser than equal to 1 crore, and if the turnover from business, they are exempted. Or if it is a professional turnover, if it is less than equal to 50 lakh, then also they are exempt. But here turnover means immediate turnover of the immediately preceding financial year. Okay, if you're talking about this financial year, 22-23, and to know the applicability or non-applicability, we need to refer to the turnover of 2021-22. That is the financial year immediately preceding the financial year in which this benefit is provided. Okay, friends. Now let us move. Now, few more things. Subsection 2 of that section has given power to the central government to issue guideline. And accordingly, central government has issued a guideline. So we'll be referring to that. And this guideline, whatever is issued, that will be binding on the income tax authorities. So therefore, income tax authority has to complete their assessment, has to pass order by referring to that guideline. And one more explanation is also given in that section, that when we're saying that who is the person, trying to say that person responsible. In the first section we have seen, the person responsible has to deduct tax, or he has to ensure that tax is paid. Who is that person responsible? The person responsible means person who is providing such benefit and perquisites. And in case the benefit and perquisites is provided to a company, you know it's an artificial legal person. If it is provided by a company, then the company itself, company will be responsible, including the principal officer. Company is responsible as well as the principal officer. Both of them are responsible. This is what 194R is talking about. Now you have seen the power is given to the central government to issue guideline. Consequently, central government has issued guideline. You look at this guideline. Okay, are you able to see it? This is the guideline you see. First, you have seen that power is given in this particular section. Central government may issue guideline, and central government issued the guideline. It says guideline for removal of difficulties under subsection 2 of section 194R of Income Tax Act 1960. And this guideline was issued through circular number 12 of 2022. The entire guideline you can download. You can search by using search engine, circular number 12 of 2022 of Income Tax Department, or you can go to the Income Tax Department's website. You can find out circulars, and this particular circular can be downloaded. And this is issued recently, only on 16th of June 2022. There is a need to understand this guideline. Many important aspects are covered here. One by one, I'll be explaining you that thing. Look at this briefly. This particular guideline, in fact, addresses 10 important issues. 10. So all these issues are important for us. Let us quickly discuss. It is there in the form of FAQ, question and answer form. So let us see what it says. You see, this is the first question in that covered in that circular. It says, is it necessary that the person providing benefit or perquisite needs to check if the amount is taxable under clause 4 of section 28 of the Act before deducting tax under section 194R? You see, many people think that income tax is a tax on income. So if it is not an income, then tax will not be paid. So the benefit I am providing, it may not be income in the hands of the recipient. So should I check it is income from him or not? I am paying, but whether it's income on the other in the hands of recipient or not. Should I check that thing? After that, I will deduct tax. If it is not income, then tax is not payable. Then why should I deduct it? This question might be coming to the minds of some people, but department has clearly clarified that you need not check. It says no. Answer is big no. Okay. Is it necessary to check? Department says no. It is none of your duty or responsibility to check that whether it's taxable in the hands of recipient or not. You are providing, your duty is to deduct tax and source. The department has made it clear. You need not read section 20. You need not see whether it's taxable or not. Just for your better understanding, let me explain you what is section 28. As you know, income tax is collected under 5 different heads. One of the head is the profit and gains of business and profession. And there, if you see the section 28, it talks about what are the incomes which are covered under profit and gains of business and profession. If you look at here, you see these are the list of incomes which are there. You can go through this provision. If you want, what are the items which are taxable? Here you see there is one item number 4. The value of any benefit and perquisites, whether convertible into money or not, arising from business or exercise of the profession. So if any benefit or perquisites is received in connection with the business and profession, that should be taxable. Okay. But many times what happens, the recipients, they do not disclose it. They receive the benefit, but they do not disclose it in the return. So it becomes difficult for the government to find out actually whether tax has been escaped or not. But through this provision, that particular loophole is blocked now. The person who is providing will be deducted tax at source, so automatically that income will be trapped. Okay, for example, let us say some medicine companies are providing free pleasure trips to doctors. So now they have to deduct TDS. So even if the particular doctor, let us take an example, is not disclosing, many of them disclose, but if someone is not disclosing, that can be easily trapped because TDS is there. In his 26S, it will be reflected. Okay, so, but when someone is providing that benefit, he need not check it is taxable in the hands of the recipient or not. That's what this provision has been, this particular question has clarified that. Yes, friends. The next issue or the next question is like this. Is it necessary that the benefit and perquisite must be in kind for section 194R of the Act to operate? Some people may think that when you're talking about a benefit or a perquisite, it should be in kind because we understand normally that perquisites means it is a non-monetary value. But here this question has clearly made it or has clarified that it can be in cash and can be in kind. And you have also seen the section also clearly says that benefit and perquisites may be provided or may be convertible in money or may not be convertible in money also. So here answer is again no. It's not necessary that perquisite or the benefit should be in kind. It may be in cash, it may be in kind. Cash means it may be in the form of reimbursement or some incentive. Kind means any gift or any other thing, any other facility may be provided. Both are covered under this particular section. Issue number 3. Is there any requirement to deduct tax under section 194R of the Act when the benefit of perquisite is in the form of capital asset? Here also some people form an opinion that normally we know that the capital receipts are not taxable. Revenue receipts are taxable. Capital receipts are normally not taxable unless they're specifically included in the charging sections of income tax. And revenue receipts are always taxable unless they are specifically exempted. So, on that logic, some people may think if you are providing a benefit which is a capital asset, so actually there is not an income in the recipient's hand. So, in that situation, we need not deduct tax at source. But department has clarified that no, you need not check that whether it is a capital receipt or benefit, capital receipt or revenue receipt. You have provided the benefit, and it is your responsibility to deduct tax. So yes, you are required to deduct tax at source. Issue number 4. This is a very important issue, and it covers a practical aspects also. Many times, this businessman or these people who earn from business and profession, they give sales discount, cash discount, rebates, etc. Now, question comes: is it not a benefit? And if that is so, should we deduct tax from these benefits also? Suppose a businessman is providing discount, and on that discount, since that is a benefit, he has to deduct tax at source. The department here is clarified that logically it's right that it is a benefit and purpose. But yes, it is a benefit or it's a purpose, but no tax is required to deduct it. Department has considered that it will be a very complex process and it will practically create difficulty for many people to deduct tax at source. So many tedious, formalities has to be maintained, has to be complied with. So therefore, in order to avoid all these difficulties, department has clarified the no TDS on sales discount, cash discount, and rebates. Okay, if you read this particular answer, which is given in the circular, here it says logically these are also benefits, and they're also related to sell and purchase. But since this is going to put the seller into difficulty, no tax is required to be deducted. So thankfully, sales discount, cash discount, and rebates are not subjected to TDS under Section 194R. But I repeat, here we're talking about sales discount, cash discount, and rebates. But it is not same when in some other areas. Okay, one more thing we'll be covering right now. One is, what is this free item? Free item means suppose you are purchasing 10 items, but actually 2 items are extra is given free of cost. That's also a benefit, that's also a perquisite, and that's also related to business. In that case, also department has clarified no. On those free items are just like a discount. On that free item also, no need to deduct TDS. I repeat, no need to deduct TDS when certain free items are given in addition to the items which you are purchasing or which you are selling. You are selling 10 items, but 2 items are given free. In that case, it is not necessary. But when free samples are provided, free samples means you are not purchasing anything. Okay, pure free samples, but free samples are given. Let us say free samples are provided to doctors, free medicine samples. So on those free samples are actually a benefit as perquisites, and on that tax has to be deducted at source. So department has clarified the situation is different for free samples. So above relaxation means relaxation of free items is not extended to free samples. So free samples will be subjected to TDS. Right? Similarly, this relaxation is not also extended to incentives. So only 3 situations is covered in that relaxation. Okay, sales discount, cash discount, and rebates, but not to incentives. Okay, so department has clarified when a person gives incentives other than discounts and rebates, and this incentive may be in the form of cash or kind. Okay, incentive may be given in cash or maybe some facilities or certain benefits or certain items may be given. Then also tax is required to be deducted at source. They are not coming under these relaxes. Or incentive may be in the form of sponsoring a trip, okay, for recipient or his relatives for achieving certain target. This incentive also can be in the form of free tickets for a giving, or may be given in the form of free medicine samples. All these are illustrative. These are the examples are only illustrative. There might be many more examples like this. All these cases, this relaxation is not extended, meaning tax is required to be deducted at source under section 194R. Now, having understood that tax is required to be deducted, now one question comes: when the benefit is provided in kind form, how to do the valuation? We need to arrive at the value. That has been addressed in question number 5. What do we require? We require to arrive at the fair market value. Tax has to be deducted at that value. And it has also been clarified. If the items are purchased, let us say I'm providing a benefit, I'm providing a laptop. Market value might be, let us say, 60,000, but somehow I purchase it at 50,000. So if you have purchased that thing and providing that benefit, then the purchase price will be considered as the value. But if I have manufactured, I have not purchased, I have manufactured. Let us say I have not purchased that laptop, I am manufacturing that laptop and giving it to my business associates. Then the price which I charge to my customers, that means the market price, normal market price, which I'm charging to the customer, that will be the value. So we need fair market value. If I'm purchasing the purchase price, it doesn't matter whether the market price is something different. But if I manufacture, I have to value it at the price which is charged to customers. But in all the situations when deducting TDS, we have to remember GST will not be included. When you purchase something, GST is charged on that. And all of us are aware that TDS is not made on GST. Suppose my purchasing for 1 lakh rupees, GST charge 18% on 1,18,000. I will be making TDS on 1 lakh only, not on 1,18,000. GST has to be excluded. I think I have clarified the concept. Okay, so this is what question 5 deals with. This is what you can see, the exact wordings of question 5. If you read it, what I told you, the same thing is explained. We need to know the fair market value. And if the benefit, if item is purchased, then the purchase price. If it is manufactured, the price that it charges to customer. And it also says GST will not be included, which I summarized just now. Let us move to the next issue, that is question number 6. This talks about, you can say, the demo items. Sometimes what happens, many companies do this. They provide a product to some social media influencer. They may use that product and talk about that product in social media. They'll be speaking about the product. This is a kind of advertisement. But product is given to a person. Is it a benefit or not? Is it a perquisite or not? This is the issue. This is the question. And department addresses that it depends upon the facts and circumstances of the case, whether it is a benefit or perquisite or it's not a benefit or perquisite. So department says we have to see if the item is returnable, if it is given on the condition that it will be returned, then it is not a benefit, not a perquisite. Okay, but if it is to be retained, then it is a benefit and perquisite. Consequently, it will attract TDS. So we have to conclude on this basis, whether the item is returnable or not returnable. So if some demo products are given, if you ensure that it is returnable, it has to be taken back, then no need to deduct tax at source because it is not a benefit and perquisite. But it is to be retained by the user, then it is definitely benefit and perquisite. What I told you, Same thing is explained. This is the exact wording of that circular. You can have a look. It says it depends upon the facts. If it is to be returned, then it is not to be treated as benefit and perquisite. If it is to be retained, then it has to be treated as benefit and perquisite. Consequently, Section 194R will be attracted. Now, one more issue. It is again very practical issue. Expenses of the consultant met by the assessee. Suppose there is a company who is engaging some consultant and consultant is traveling, and in that context, consultant is incurring some expenditure, and this expenditure or out-of-pocket expenditures are billed to the company, and the company is reimbursing this. Are you getting? Company is reimbursing this. In that situation, what happens? We have to, what matters here is the invoice. So one need to check that invoice is whose name. Okay. Now you imagine the situation. Let us say consultant has incurred some out-of-pocket expenditure, and the bill is in his name. That means consultant's name. Consultant can claim this particular expenditure in his profit and loss account. In his statement of profit and loss, this is an expenditure. And if this is reimbursed by the company, it is 100% it's a benefit or per. But if the invoice is not in the name of the consultant, but is in the name of the assessee or the name of the company, then it is not a benefit. It is the company's expenditure. Consultant has paid, consultant is reimbursed. It's not a benefit. So we have to, in this situation, circular also clarifies we need to look at the invoice. So if invoice is obtained in the name of the company or name of the assessee, then we'll be calling this is not a benefit. Okay, it's a reimbursement made, it is not a benefit. But if it is a name of the consultant itself, then it is definitely a benefit. Consequently, TDS will be applicable. Now, this concept you can understand with the help of this chart. You can look at this chart here. Expenses of the consultant made by the assessee, we have to look into the invoice. If the invoice is in the name of the assessee means imagine it's a company with the name of the company, then it's not a benefit, not a perquisite. But if it's not in the name of the assessee, it's a benefit and perquisite. Here, I'll suggest if there is any company who wants to reimburse this type of expenditure, please ensure or give direction to your business associate that bill should be in the name of the company. Then only TDS is not required to deduct. If you read the last line, it says invoice is not in, if the invoice is not in the name of the X means the company. And the payment is made by the X. Invoice is not in their name, but it is paid by the company. Whether directly company is paying or it is reimbursed, it is a benefit and purpose. So if company is paying for an invoice which is not in its own name, then it is a benefit and perquisite. Consequently, 194R is going to be attracted. Hope I have made this point clear. Next issue is about dealers conference. Circular has clarified the expenditure in connection with the dealers conference, the business conference, is not to be considered as a benefit and perquisite. Here you have to see the object of that conference. If the object of the conference is to educate dealers or customers about the following aspects, like about a new product which is going to be launched, or to have a discussion about the new product, or for the purpose of obtaining orders from dealers and customers, or for teaching sales techniques, or for addressing queries of the dealers and customers, or for reconciliation of the accounts of the dealers and customers. If this is the object of the conference, then it is not to be treated as incentive or benefit. But however, the conference must not be in the nature of incentive and benefit to select the dealers who have achieved a particular target. If that is so, in that conference, some dealers are selected on certain basis on because they have achieved some targets. And purpose of this conference is to award them. In that case, this is a benefit. Okay, so therefore, this line is important for us. Such conference must not be in the nature of benefit and purchase to select the dealers and customers who have achieved a particular target. One more issue connected to this is the leisure trips. Is it a purchase? Some companies provide leisure trips to their uh, dealers and to the relatives of the dealers. Leisure expenditure attributable to leisure trip is a benefit and perquisite, and 194R gets attracted. Expenditures for incurred for families accompanying the person for attending dealers and business conference, that is also a leisure trip. That is also a benefit and perquisite. TDS gets attracted. Expenditure for prior stay or overstay. Conference is for 3 days, but people are going prior to 2 days before, 2 days before, and they're staying, they're extending the stay for another 3 days. That prior stay and overstay beyond the dates will be treated as benefit and projects, and they will be treated just like a leisure trip. Consequently, 194R gets attracted. Next is how to deal with a situation when I have talked about this sometime before. How to deal with the situation when this benefit and perquisite is provided partly in cash and partly in kind, and the cash part is insufficient to meet the TDS. In that case, how the benefit provider will ensure that tax has to be deposited? It has been clarified by the department. The recipient of that benefit or perquisite is required to deposit in the form of advanced tax challan. In the advanced tax. That means advanced tax challan he has to. Taxpayer may rely on a declaration with a copy of this advanced tax challan. So advanced tax challan he may have, and declaration he may have. It should be provided by the recipient, confirming that he has deducted the tax which is required to be paid, which is required to be deducted. He has deposited the tax which is required to be deducted on that benefit and purchase. And it will also be required to be reported in TDS return along with challan number. In TDS return also this fact has to be reported, and Form 26Q, which is related to TDS returns, has added this provision. That means this aspect can be reported in TDS in 26Q form. So that aspect has to be taken care of. So far as the provider of this benefit is concerned, he has to rely, or is entitled to rely on the advanced tax challan copy and the declaration receipt from the recipient. This is one way. That means the recipient has to pay it through advanced tax challan. Other way is that the provider of this benefit may pay tax on it. Okay, that means he may sponsor the TDS part also. For example, I am providing a laptop worth 1 lakh rupees. Tax is required to be deducted at the rate of 10%. If I am providing, I may deposit the tax also on the behalf of the recipient. But here thing is that you have to consider I am giving a laptop of 1 lakh. Right? Plus tax also I am depositing 10,000 rupees. Tax is the liability of the recipient. When I am depositing on his behalf, I am also providing one more benefit. So actually the benefit is this 10,000 rupees is also a benefit. So total I am providing 1,10,000. Okay, so ideally this has to be grossed up to deduct. So I need to deduct tax at 1,10,000 rupees. Is it not? And if I am sponsoring that thing, that amount is also a perquisite. If a person with that amount, then any tax I am paying, that is also a perquisite. So in this situation, there is a simple method to calculate the tax liability which is required to be deducted. So if you look at here, this formula is given on the screen. We have to find out what is the actual benefit. So if you are giving a laptop for 1 lakh rupees, That is actually that amounts to 90% because tax I have to bear. I am depositing this. So 90% is 1 lakh, but is 100%. So that benefit, that is 1 lakh divided by 90 into 100. So if you do that calculation, so for you, I'm showing you with my calculator. Let us say 1 lakh divided by 90 into 100. If you do it, you can find it will be coming to, look at here, it will be coming to how much? 1,11,111. Okay, so I have to gross up the amount to that. So actually the value of the benefit is 1,11,111. On that, I have to deduct 10%. 10% is how much? 11,111. So 11,111 I will deduct. I'll be depositing with the government. I will give the laptop of 1 lakh rupees. This is how it has to be grossed. So the benefit divided by 90%, or benefit divided by 90 into 100. This is how I have to gross up if I want to sponsor that TDS part also. Okay, so there are two options. Either the provider of the service may do this thing, gross up, or it may ensure that the money is deposited through advanced tax challan and it is and a declaration is received. So company can adopt both the things. Hope I have clarified this. Next issue. Next issue is that you see 194R comes into effect from 1st July 2022. Therefore, benefits which are provided only after that will be subjected to TDS. But for calculating the aggregate value for non-applicability, the 20,000 is the criteria. If the value doesn't exceed 20,000, you did not deduct. For that thing, you have to consider the entire financial year's benefit. Okay. So the aggregate value of the benefit and perquisite provided, likely to be provided resident during the financial year. The entire financial year's benefit perquisite has to be provided. But we have to do one thing. That for 20,000 rupees, I told you the entire financial year. That means from 1st April 2022 to 31st March 2023 will be considered. But for deducting tax source and for making TDS, since 194R is applicable from 1st July 2022, any benefit and perquisite which is provided on or before 30th June 2022 would not be subject to tax deduction. This has been clarified in the last part of the circular. This is also important that only post-July, whatever services or whatever benefits and perquisites are given, we're supposed to deduct tax at source only on that. But for claiming this non-applicability, claiming the exemption, to consider that 20,000, we have to take the entire financial year. Okay, friends. With this, we are completing our discussion. Hope we have clarified most of the things. And in case still you have some doubt, you can go to the department website, download the circular. All these things are explained there. Thank you very, very much. Thanks a lot.